Indian economy has definitely slowed down from 8.2% growth last year to something in the region of 6.4%. It was not really unexpected because we've had three successive years of very high growth, averaging 8% in the last 3 years. And on top of that, if you look at what the RBI's projection was, or even the Ministry of Finance for that matter, we was talking of a region of around 6.5 to 7%. That was the ministry, 6.6% was RBI, and we came at 6.4%, which though marginally lower. Now, if you look at the center itself, out of the 10 lakh crores which what we spent, there was a bit of sluggishness in the beginning of the year on account of the elections, so spending was definitely lower. And by the time we saw that there was a bit of acceleration in terms of government expenditure, it tended to be concentrated more in terms of railways, partly in defense. We've seen that probably in the road sector, which is the third important sector when it comes to government capex, there's definitely been a case of saying there's been a slowdown.
At the end of the day, are talking about putting more money in the hands of people, however that happens. So what are some of the ways in which you think the finance minister will be able to address that problem through the budget?
See, the point you have raised is pertinent when we say that are we creating enough jobs? The answer is that jobs are being created, but a lot of them are being created in the unorganized sector. When I say unorganized, the lower income kind of jobs.
Just a week before the budget, all attention is focused on the finance minister, Nirmala Sitharaman. With the GDP projected to grow at only 6.4% in 2024-25, marking a 4-year low and a significant decline from 8.2% in 2024, concerns arise over sluggish consumption and a struggling middle class. The finance minister faces numerous critical issues that demand immediate attention. What will she prioritize in the upcoming budget? That's the question we are exploring through a series of interviews here at Mint, your budget headquarters. And now we have joining us Mr. Madan Sabnavis, Chief Economist, Bank of Baroda. Thank you for taking the time, sir. Thank you for talking to us.
Thanks, Abhishek. Pleasure to be here.
So, before anything, let's get an overview. How do you think the economy is set up at this point in time? And then, of course, we will get into specific issues.
Okay, the way I look at the state of the Indian economy, it's slightly different from the way in which you have termed it. Because I think that while the Indian economy has definitely slowed down from 8.2% growth last year to something in the region of 6.4%, it was not really unexpected because we've had three successive years of very high growth, averaging 8% in the last 3 years. And on top of that, if you look at what the RBI's projection was, or even the Ministry of Finance for that matter, we was talking of a region of around 6.5 to 7%. That was the ministry, 6.6% was RBI, and we came at 6.4%, which though marginally lower, to my mind, is not really a major problem because I think there is enough scope for the Indian economy to do much better even in the current financial year. I say this because this is the first advance estimate, and our own models show that we could be ending up with something slightly higher than 6.5%. Now, this said, I think the issues which you flagged in terms of consumption and investment, they are very much pertinent because there are definitely signs of saying that consumption growth has definitely been taken a back seat primarily on account of inflation. There's also a view that investment may not be growing at the same pace as what we saw in the previous years, primarily on account of both the government factor. The government's capex has been lagging behind the target which was set for itself, both at the center as well as the state level. And there was some concern in terms of private sector investment. But on the private sector investment, our assessment is that if we discount for the aviation sector, that is the airlines industry, we also discount for the fact that we had elections in the first quarter. So that is something which came in the way of private investment. But there are definitely signs that private investment has picked up in a big way. And we are on a very stable path of private sector investment growth for 24-25. So it's a kind of a mixed picture, definitely not very, very comfortable. There's definitely some policy action which could be helping, but not definitely a situation which causes for any kind of despair at this point of time.
Right. And recently, while talking about the state of economy, you were talking to a magazine and you talked about the lipstick effect and the K-shaped recovery. If you could talk to our viewers for a little while about, what those things are, what are those phenomena, and explain it to us.
So actually, look at something like the lipstick phenomenon. It's more a case of saying that when we are going through a period of stress, when I say a period of stress, it's essentially a case of saying that post-COVID, we have seen that there were a number of factors which came in the way in which guided our own actions. there was a tendency for inflation to be very high, which meant that if we wanted to actually indulge in something, we tended to spend money on certain things which are called semi comforts or semi luxuries. So that's what we saw, that this particular industry of cosmetics, for example, is something which had done exceptionally well. And the fact that these products are being produced not just by the organized sector, but if you go down, step down one step, you will actually see that there are a number of other lower branded products. When I say lower branded, they may not be the top of the mind recall kind of companies which are bringing out these products. We did see that there was a fair amount of consumption which took place. People started getting back to work. Earlier, it was a case of work from home, so therefore there was no necessity to consume these products. But subsequently, we saw that as people were returning for home, you wanted to indulge in certain things. Therefore, you went ahead and you consumed. In fact, I would actually stretch this one step ahead and also say that if you look at the kind of response which we have seen for a number of these concerts which have been held, at least in Mumbai in the last couple of months, the response has been very, very overwhelming. So, quite clearly, there is a case of saying that people do want to spend, people do want to indulge, and this is something which augurs well for the overall consumption in the economy.
Right. Now, one thing which we keep talking about, budget after budget, and the finance minister, of course, keeps urging the private sector. I'm referring to, of course, CAPEX. So let's talk about both sides of that coin. Let's talk about the private CAPEX. Let's talk about the public CAPEX. So, as far as the government's investments are concerned, where do you see, which sectors do you foresee that happening in, and going forward? Also, perhaps if you can comment on, the kind of sluggishness that we have seen as far as private sector CAPEX is concerned.
Okay, so this is an interesting question which you've raised, because we're looking at government capital expenditure. They were actually looking at something like 11.1 lakh crores to be
Yeah.
spent in 24-25. Okay, out of which I think 1 lakh crores was to be given to the state governments based on certain performance parameters. So if the states performed in a certain thing, brought about certain kind of reforms, then they would be given these funds. Now, if you look at the center itself, out of the 10 lakh crores which were to be spent, there was a bit of sluggishness in the beginning of the year on account of the elections. So spending was definitely lower. And by the time we saw that there was a bit of acceleration in terms of government expenditure, it tended to be concentrated more in terms of railways, partly in defense. We've seen that probably in the road sector, which is the third important sector in when it comes to government capex, there's definitely been a case of saying there's been a slowdown. And our own sense is that probably going ahead, we will not be able to meet those kind of targets. And the government could be falling short by around 1 lakh crores, maybe 1.25 lakh crores. So we may not be spending 11 lakh crores. It could be closer towards the 10 lakh crores. So that is one part of the story. Now, if you look at the private sector, normally the private sector investment is driven by two sets of considerations. And this is where the K-shaped issue really comes in.
Yeah.
When the government spends, say, on roads or railways, there is increase in demand for steel, for cement, for machinery, chemicals, and automatically what we have seen is that there has been a pickup in terms of investment in the private sector companies who produce these products. So that is the positive sign which we have seen, one part of the K-shaped curve. On the other hand, the issue which you had flagged in the beginning in terms of consumption, growth being a bit sluggish or being slow, we've heard about the urban stress, urban demand has been lower, rural demand has been higher. What we have seen is that a number of companies in this particular segment, the consumer goods segment, still have surplus capacity. Now, if you're looking at a private sector company, you normally will invest when you reach an optimal level of capacity utilization. In the Indian case, it's in the region of around 78 to 80%. Now, if I'm operating at maybe a capacity utilization rates of 65, 70, 71, 72%, and I don't see adequate demand, there is no incentive for me to go ahead and invest right now. And remember, we are in this particular phase where interest rates have actually peaked. We have the repo rate at 6.5%. We're talking of whether it's when it's going to be lowered. We're not talking of the repo rate being increased, given the fact that inflation appears to be trending downwards. There is a case of wait and watch when it comes to these particular sectors. So the K-shaped recovery or the K-shaped trend which we're seeing in private investment follows this particular pattern. Industries which are related to infrastructure goods are actually investing, so that's the positive story which we're getting. Industries which are in the consumer goods segment are still a bit hesitant. They're probably waiting for demand to revive. And we do believe that as we come towards the end of the year, there would be a bit of improvement in capacity utilization rates. It normally happens by the time we come to March. And hopefully in the next financial year, it will be better, which could see a more broad based pickup in private sector investment.
Right. And then there is also the issue of the utilization of the capex. I'm looking at a Deloitte report, and it claims that gross fixed capital formation, which is a key driver of the economy, of course, slowed down to 5.4%. And this was partly due to slower government capex utilization, which was at 37.3% in the first half of this year, and which is also lower than the last year, which was at 49%. So, first, the issue of capex, which you addressed to an extent. Then, if you can talk to us for a little while about utilization of this capex.
See, the utilization will follow from the fact that if I have a target of 10 lakh crores and I have not been
Yep.
able to spend the right kind of amount in the first 7 months of the year, 8 months of the year for which we have information, the utilization is, of course, lower. Now, the challenge which really comes is that when it comes to government projects, when you're talking of roads, railways. It's a case of saying that in the remaining month period of time, I'm using the month November because that is where we have information. So I'm talking of December, Jan, Feb, March. Does the government or any entity have the ability to implement more projects? That's where the question is. And that's where I feel that there could be a bit of shortfall in terms of government spending. Because out of the target which you had, out of the funds which were allocated for CAPEX, if you're not able to spend the whole amount for the administrative reasons because you started late and then you suddenly come towards the end of the year, the implementation capacity is something which is also something which we have to keep in mind. So, in fact, slightly, if I have to digress a little bit, we should also remember that expecting the government to keep increasing capital expenditure by 15-20% every year is just not feasible. It's one thing to say I have the money to spend. The second thing is that do we have enough projects? Because all these projects are actually subcontracted to the private sector. You need to have
Yeah.
those kind of roads. You need to have those kind of trains which you want to construct. That is when you really see the implementation taking place. So it's going to be much slower. The pace of growth is going to be slow, but that is the way in which it would normally go.
Right. One of the reasons I asked you the utilization of capex question is also because of the slowdown that we have seen in the jobs market, and of course in consumption as well. We at the end of the day are talking about putting more money in the hands of people, however that happens. So, what are some of the ways in which you think the finance minister will be able to address that problem through the budget?
See, the point you have raised is pertinent when we say that are we creating enough jobs? The answer is that jobs are being created, but a lot of them are being created in the unorganized sector. When I say unorganized, the lower income kind of jobs, if you're talking of logistics, you're talking of construction, we've seen that going by the data put up by the government as well as the RBI claims data, there has been a lot of jobs which are being created in these segments. Now, typically, they are not the ones which give you high amount of incomes. It provides you employment. You're actually working through the day. But if you're an employee who's delivering food or you're delivering some groceries, you're not going to earn the kind of income which will give you the consumption part, which will help to actually add to the overall demand and improve capacity utilization and accordingly investment. So what we really need is some kind of a major push which the government can give, and the major push can come in case I'm able to do something on income tax front. The income tax structure needs to be revisited, and depending upon, of course, the ability of the budget to handle these kind of concessions which are given, there need to be wide-ranging concessions given, both in terms of adjusting the tax slab rates as well as the tax rates too. And normally, if you have seen that the government tends to give the benefits more at the lower level rather than at the middle and higher levels. But I think you have to do it, make it all encompassing, because that's the only way in which you can give a push to consumption. By merely increasing the standard deduction by 10,000, 20,000, or changing the rates at a lower level by maybe a lakh or so, that's not something which is going to deliver the big push for consumption. It has to be done across the table, because if you look at the middle class, we have three segments: the lower, middle, and the upper. I think the middle and upper middle class are the ones which probably have been affected on account of high inflation. And that's what's holding them back. So, in case there's certain concessions given in terms of tax rates or the tax slabs, I think that's when the real purchasing power can go up, and that could actually make a difference for the overall growth of consumption in the economy in the coming year.
Right. And then there is also the matter of simplification of the tax regime, as several reports have pointed out. What do you foresee happening on that front as far as simplification of the tax regime is concerned? Now, it's being said the plan is, of course, to knock off 40% of the volume of the existing tax laws. Then there are also talks about simplifying the language so that it becomes easy for the masses to understand. But at the same time, there are people who are pointing out that this kind of simplification could perhaps lead to more problem, perhaps even litigation going forward. So, what do you see? What is your view as far as simplification of the tax regime is concerned, and the reports which are referring to it?
See, simplification of the tax laws, I think, is something which is very much required because since taxes are paid by lots of us, I think understanding what these tax laws are very important. Because very often we're not really aware, we're being guided by experts or chartered accountants who actually tell us as to what actually these laws mean. So making it more simple is something which is definitely desirable. And I think the very fact that the government, the finance minister, has spoken about this new tax regime, which actually does away with all kinds of concessions and says that we have lower rates and everybody gets taxed in a similar manner based on what your taxable income is. I think that is something which actually makes a lot of sense. So I think the government is trying to go into in that particular direction. But right now we of course have two different regimes which are running, so that will probably continue for some more time. Now, what you're talking in terms of litigation, that's also true because whenever you change any of the language of the tax laws, there's also the question of saying that it'll be open to interpretation. So it's something which takes time. It has to be done with care, so that it shouldn't be a case of saying that you and I look at it in a different way or interpret it in a different way, and then we go over to the courts. So I think this is more of an administrative kind of issue. Will not really be a constituent of the overall budget which we're talking of, the budgetary numbers which
Yeah.
could be influencing both the revenue side as well as the expenditure part of the budget.
Right. And talking about revenues, whenever such an exercise is carried out, we have seen it across the world. Whenever such an exercise is carried out, the government needs to have, in such a situation, an appetite for taking a hit as far as the revenues are concerned. Do you think the government is in a position to do that?
So actually, this is the prerogative of the government. See, as a taxpayer, and what we have been discussing, saying that you cut the income tax rates, it is something which will definitely benefit us as individuals. It will help to push up consumption. It will help to push up.
But you're equating, but Mr. Sabnavis, you're equating simplification with tax cuts. Is that fair to do?
No, no, I'm not doing simple. Simplification is the language which I'm talking of. So I should be knowing
Yeah.
what are the exemptions which are there, which are not there. How exactly does one go about paying taxes? How do I make sure that the different sections which are there, that is more a case of interpretation in terms of laws. Now, what you're talking of in terms of saying that when I'm drawing up a budget, I have a fiscal
Yeah.
deficit number to look at. Am I in a position really to start giving the concessions on income tax so that I take a hit in revenue? Because we should remember
Yes.
it's a zero sum game. If the government loses 1 rupee in terms of giving me that 1 rupee advantage in terms of tax which I can spend, it's a case of the government considering whether it can actually do it, given the fact that I think the overriding factor which is going to drive the budget is
Do you think the
reduction of.
government can at this point?
But at this point of time, I think they can make certain compromises, but how sharply we'll do it is something which we'll have to wait for the first. Because we have to keep in mind that the government's starting point is going to be the fiscal deficit ratio, that I want to get it down from 4.8 or 4.9, whatever the final number turns out to be for 24-25, to something 0.5% less. So within that, making an assumption of what the GDP growth will be, you know what's going to be the taxable base. Accordingly, you'll get to know as to what's going to be your revenue, what will be your total
Right.
expenditure which has to be incurred, and then you'll see whether at all you can do anything on the income tax front. So while I may be making a suggestion of saying give a blanket a tax concession to everyone, it may not be feasible when you're drawing up the budget.
Right. I also want to talk to you about a couple of other issues, but before we actually start talking about, some of the, glass half full things like export growth, especially in the case of electronics, etc. I also want to quickly get your comment on the monetary policy going forward. Of course, I mean, we're not talking about the monetary policy as in connection with the budget, but of course, before and after.
See, the way in which I would connect it to is that, see, the budget actually comes up with a fiscal deficit number. You'll get to know what is the overall gross borrowing program of the government. To my
Yeah.
mind, if I go on the basis of the last 3 years, I think it's been done in such a manner that it does not really put too much of pressure on liquidity. It's been maintained at a very stable level of around 14 to 15 lakh crores, which I think is what we're going to see even in the next financial year. So when you're talking of monetary policy, I think the monetary policy committee would be primarily looking at this particular trade-off between inflation and growth. We have seen in the earlier policies, some of the members did opine that they were worried about growth. Now, as I gave you my view of growth, I think 6.4 is not really bad. We're still on the path of in the region of 6.5%, but it's a subjective view. If members do believe that growth is something which has come down and with inflation seeming to be under control, with food inflation moving in the downward direction in the next couple of months, there could be a growing view that maybe we should be having a cut in repo rate. But I think out here, a factor which wasn't there earlier, which has come in, is the global factor. We have seen that ever since the US presidential elections, we have seen Donald Trump already talking of some of his economic policies, some of them being implemented. I think that has actually led to a lot of volatility in the forex market, which is finally affecting overall liquidity in the banking system as the RBI keeps supporting the market. So I think this is another factor which would come into way. So earlier, I would have felt that there could be a repo rate cut coming in the month of February, but
Right.
probably the committee may wait for another policy when you have a better hang about what is really happening in the global economy before any such measure is taken.
Right, right. Talking about what's happening in the US in connection with what's happening in India, the question of rupee versus dollar, that's one question which I'd also like you to address. I mean, the rupee's just been tumbling, and should there be concerns about the level that rupee finds itself versus the dollar?
See, if you look at the rupee, it's been driven by a diverse set of factors. See, normally we talk
Sure.
of fundamentals, that is the inflows and outflows of dollars. So, if the rupee is being pulled down because there is a fundamental disequilibrium in terms of the flows of dollars in the system, then I think there is a reason for us to believe that the rupee should be depreciating, or the RBI does certain kind of intervention because you are able to influence the demand and supply for dollars. However, today we have seen that the rupee has been depreciating primarily on account of the dollar becoming very strong. If you look at the dollar index, it's been strengthening. And I think once the dollar strengthens, there's been a tendency for other currencies to weaken, and that's what we have seen. If you juxtapose the movement of the rupee with other foreign currencies, we have seen that the Indian rupee has performed much better, even if you adjust for inflation. So that's one of the reasons as to why we have seen that the rupee has been falling at certain points of time. We have seen the RBI intervening in terms of selling dollars at certain points of time. It's led the dollar depreciate. So we believe that the rupee could probably move up to 87. That would be a fair valuation, depending upon the amount of intervention which the RBI would do. Because we should remember that every time the RBI sells dollars, it's been selling a
Yeah.
lot of dollars. We had a peak of 705. Now we're around 624, $625 billion. There is a case of saying that banks pay cash for it, which means that there is a liquidity crunch which takes place. So the RBI will be balancing these two things about whether it should be selling dollars and let the rupee depreciate. But we have seen some bit of stability in the last couple of trading sessions. We are now come back to that 86.50 range. But our calculations show that up to 87 would be a fair enough thing where we would also not lose the export competitive advantage, especially in this uncertain world where the American policies could be having far-ranging effects on the overall flow of global trade.
Right. And let's for a little bit also talk about, some of the glass half full things that we were talking about earlier. And that is, of course, the increase in exports of electronics, engineering goods that we have seen in the recent times. We're talking about mobile phones, laptops, etc.
Okay, now if you're looking in terms of electronics, I think that's been one of the success stories which we have seen. And a large part of the credit would actually go to the PLI policy. Because if you look at the PLI scheme of the government, I think it's been very much successful, especially in the electronics, the mobile phone segment. And that is because of the incentive which has been provided, where if you increase your output by a certain amount, you get a
Yeah.
certain amount of subsidy in terms of cash back. And that's where we have seen it. We've also seen it partly in engineering, partly in the renewable space, the solar rooftops, etc. There has been some kind of thing. So I think this kind of thing will have to be something which will have to be persevered with by the government to make sure that our exports become more competitive. We're able to capture the markets going ahead, because there's going to be a lot of competition now. Because with the US talking of imposing tariffs, we really don't know what China is going to do. China is not going to sit back. They're going to probably trying to dump their goods in other countries, including India. So there is going to be a lot of realignment which comes when you're talking of global trade flows. So I think exports are something which should be getting enough focus in this particular budget, which would probably be through the PLI scheme. But if there's anything else in terms of duty drawbacks or anything else which the government would like to announce and probably formally bring in through a trade policy, that is something which I'm sure the exporters would be looking at when the budget is presented this time.
Right. And before I let you go, your 3-point wish list to the finance minister.
See, the 3 point wish list would be number one, to reduce the fiscal deficit by at least 0.5%. So,
Right.
irrespective of what the number is, 4.8 or 4.9, get it down to 4.3, 4.4, so that we can reach a number of 3%. The second
Yeah.
is to persevere with the capital expenditure and make sure that whatever is targeted is done. I wouldn't really mind it if we still stick to 11 lakh crores, but make sure that this amount of money is spent because it has very strong backward linkages. The multiplier effects are very good. And third, as an individual, I think definitely I would be looking for some income tax concessions because I think that's far overdue. Though working in a bank, I would add my fourth thing saying that deposit interest and interest on deposits should be getting a separate dispensation, just like how equity gets it. So if equity is being taxed at 12.5%, that is the equity capital gains tax, maybe interest on deposits should get a lower rate, maybe around 15% or 20% to begin with, because I think the banks are struggling with getting hold of deposits because of money migrating to the equity markets and mutual funds.
Yeah, I think the last two suggestions that you had will give the middle class some hope. And of course, they will expect that the finance minister actually ends up doing those two things. But on that note, thank you so much, Mr. Sabnavis, for taking out the
Thank
time
you for having
and
me here.
talking to us.
Thanks a lot.